Good morning, good afternoon, good night. Welcome back to a scheme of Scalper video. In today's video, I finally got my. I didn't get my login for phase 3 yet of the funding perps account. Sorry, not my. I haven't got my login for phase 3 funding perps account, but they have sent me a KYC, which is know your client, and a contract that was drawn up. So after I sign this contract, obviously after I sign it, they'll send me the logins and stuff. And the KYC came back in a few hours. I think it was like 2.5 hours, 3 hours. And it came back and they said everything was approved. So this is the last step before actually getting the simulated trading account. Okay, so as you can see, the master account will be created after the KYC is done and this agreement is signed. So the KYC is done, agreement is signed. In connection with past, phase 1. So if you go back to my videos, you can see I'm not actually like, I didn't get another account, 100k account and then do it, because that phase 1 is the same as the phase 1 you will see in my videos. If you don't believe me, go back to the videos. The phase 2 is the same, that's the same account number you'll see in my videos. If you don't believe me, go back to my videos. I also still have the account login, so that's fine. I can even show you that. This is where it gets interesting. The rights of simulation trading. All of this is fine. Account balance and trade behavior requirements. This is where it gets super interesting. If you read through this and you got to this point, max loss limit, that's fine. Not exceed max daily loss limit 5% based on starting equity or balance of the day. So that means whichever the starting equity of your day was, right? So if you started on 10,000, your max loss will be 5% of that 10,000. If you started with the open trade and you're down $200, or down, let's say you're down 2%, your max daily loss will then be, and still the 5%, but it will be the 5 minus the 2% you're already down, because for the purpose of this rule, the higher value between equity and balance will be used. So the higher amount will be the balance, which is still like 100%, but minus the 5%. And if you're down 2%, you only have 3% of room before your max daily loss gets hit. And then that also says on equity and balance. So if you close the trade, right, in a profit, that means your max daily loss is now up however many percent you close plus the 5%. And that's all determined at midnight CEST. CEST is Central European Standard Time, if I'm not mistaken, and will affect until the next CEST time. Okay, so that's fine, that's perfect. I'm not worried too much about this, just because I'm not risking like 4%. I'm not going to be risking 4%, 3% per trade. Just because I don't know what the slippage is like. I don't know what the actual, like, if there's gaps in the data that they give or provide. So I'm not going to be using 5% at all. I'm going to use like maybe 1.5% per trade. If the customer's account hits stop loss due to slippage, the account hits the daily loss limit, max limit. On liquidity pool, the company holds the right to terminate the trader's funded account if the company proves it. So that means the company has to prove it first, right? So if it goes, has slippage one way and then has slippage the other way, I don't know how slippage works exactly, but if you're entering a trade and you have slippage and you hit the loss limit for the day, it's probably because you're over leveraged or you have too large a size on. But if you have slippage that bad and you hit the loss limit for the day, the company has to prove it. That's what it's basically saying. And if they can prove it, you will lose the account. Okay, now this one is super interesting. D. Profits from trades that are open 2 minutes prior to and after high impact news events on the affected currency will not be counted. Now listen to the wording. It says will not be counted. And then it goes on and says our system will automatically close the affected trades that are open within the prohibited time window. So they're saying, first of all, it won't be counted. Second of all, they'll close immediately. So which one of the two is it? If they don't close it immediately and it's not counted, if it doesn't go in their favor, or it goes in their favor and you lose the trade, will it then be counted? And will they still stand by this rule that it won't be counted? Okay, that's something interesting to take note of. High impact news event trading will result in deduction of any profits made from trades executed within the restricted 4-minute window. They will not be violated. You will not violate the trading account, but only the trades will be violated, which means the trades will be scrapped, will be null and void. So anything you take, it's a profit or loss. What they're saying here is that it will essentially be zero. So that means you need to pay real close attention to high impact news releases, especially for USD if you're trading any of the majors, because USD during the time of high impact news events, like sometimes it gives really good setups and you just have to wait extra minute or two and just be really careful in waiting for the extra minute or two and knowing you're waiting for that. Then it goes on and say we use Forex Factory, which is amazing, the transparency that they give. Just saying which company they're using for the news calendar sources, because certain companies or certain places would say this is high impact news even though Forex Factory says it's not. I've seen that. I'm not gonna name and shame, but I trust Forex Factory and they give pretty good calendar news events. In the event of any deduction resulting in the breach or loss, yeah. In the event any deductions result in the breach of the daily loss limit or maximum loss limit, the trader is responsible for the violation. Which basically says, okay, you took a trade between 2 minutes before or 2 minutes after. If you lose your account during that trade, you lose your account. It's your responsibility. But if you make money, you don't make money because you made it during that 4-minute window. That's basically what this is saying, or how I understand it. It's not what it's saying, it's how I understand it. Okay, and then this E is also really interesting. Any trade activities that are used to take advantage of trading platform inefficiencies. So it's gap trading, high frequency trading, toxic trading flow. I don't know what this means. Server spamming, don't know what that means. Latency arbitrage. I think that's when like the data on this feed is maybe different to another feed and the other feed is more accurate and this has to just catch up. Maybe it's like 200 millisecond difference and you have a computer that's quick enough to catch that. I think that's what latency arbitrage is, and you're just buying or selling based on the difference in that price. Hedging, I'm not sure why hedging is an issue, but hedging, long short arbitrage, I think that's playing both sides of the market. And then that's super interesting because I almost used this long short arbitrage, but luckily I lost. I lost on the long position. So if I had to make money on the long position and it came to a payout, they could have said, hey, we took advantage of this. So I was in a short already and I took a long so that I could profit both sides. I think it's what long short arbitrage means. Reversal arbitrage, no idea what that means. Tick scalping, no idea. Server execution, opposite account. Opposite account trading is like you have two accounts, you've got both funded, and if it's linked both to your name, I don't know how they'd link it on someone else's name or catch you out on someone else's name, but if both of those accounts are linked on your name and you're buying on one and selling on the other and then just taking a profit split, let's say you're max leveraging 4.95%, right 3 minutes before a news event, and you take a trade and you're buying on one account, selling on the other account, and then waiting till one's in profit and then closing it. That's what opposite account trading is, and that's really not amazing. Are all prohibited trading methods plus copy trading? Boom, they don't allow copy trading. Account managing from third party vendors will result in account termination, such activities will result in account termination. So it's basically saying if you do any of these things, we can terminate your account, close your account down. Keep in mind you're using third party EAs is allowed as long as it is a trade or risk manager. I don't know why it has to be trade or risk manager. I'm not sure what kind of EAs there are. I haven't looked into that too much. Using any third party EA is not allowed. So that means I think that's linking an EA to your account from maybe somewhere else in the world. I think that's what it is. I'm not too sure. This will lead. So that doesn't. Most of these things don't impact me because I'm not interested in all that. But what is interesting to me is gap trading and high frequency trading. What do they classify as high frequency trading, and what do they classify as gap trading? Because I could be gap trading if I'm buying in a gap, even though I don't know it's a gap. But then again, it says their trading platform inefficiencies, taking advantage of the trading platform inefficiencies. So maybe there's a gap on this platform, but on the other platform there's not, and I'm trading that. But if I'm doing it unknowingly, it's how could they say I'm taking advantage if I didn't know? Or how could I? Yeah, I'm not knowingly taking advantage because maybe their platform, yeah, their platform has inefficiencies or not caught up properly. So I wouldn't know if I'm taking advantage of this. Okay, and then uh, this will be violation and declining your payout request, which is super interesting. It says this will lead to violating the account and declining your payout request, which means they could allow this all the time you're trading, and then when it comes to payout time, they could say, hey, you've breached this rule without telling you beforehand that you've actually breached it. So that's a bit shady on their part. Therefore, customer shall not exploit the services by performing trades without applying market standard risk for trading following practices. Opening substantial larger position sizes compared to customers' other trades. This makes sense because it's like if you're opening a really small um, position size and then opening one big one and it wins, and then you're opening small ones that are losing and then one big one that wins. It's like, are you actually following a proper plan, or you doing insider trading or something like that? So that makes sense on their behalf. Whether or not the customer's account opening substantial smaller or larger number of positions compared to other trades. So that's I think the amount of days. So it's like if one day you're trading once and then the other day you're opening 70 or 80 positions, and then the other day you're trading like 5, and then it's like 1, and then it's like 115. So the times it's 115 and like 70 or whatever, those times are gonna look suspicious. Just because you're opening a really large number of positions compared to the other times. The company reserves the right to. Now this got me. This was crazy. The company reserves the right to determine at its own discretion whether certain trades, practices, strategies, or situations are forbidden trading practices. So it's basically saying if you're trading too well, we can say, hey, you've somehow violated a rule, and at our discretion, so basically on our word, on our knowing, you've violated a rule. We don't need to tell you because it's our discretion. Like when they say view discretion is advised, you can put off the TV, you can change the channel. So they can just say, hey, we putting off your account, we changing your account. Something like that. And then they could just mark it as forbidden trading practices without having to give an explanation. The account cannot be active for more than 30 calendar days. Inactive means no trades have been executed on the account. That's fine. I'm not worried about that. We'll be trading with this account. In the event of breach of any of these rules, all positions on the broker's platform shall be closed immediately, with the customs account being blocked. In such case, company has the right to terminate the agreement under the condition of Article 14. Let's go to Article 14, termination. The agreement is concluded for an indefinite period and may be terminated by either party at any time with immediate effect without notice. Okay, that just makes sense. That's like if you violate the rules, we don't have to notify you that you're closing the account. We can close your account and notify you later, or not notify you at all. But if you violate the rules, you violate the rules. That's basically it. Boom, boom, boom. Let's see, copies. This contract is made in 2 copies, one which is taken by company and the other one customer, sorry. The copies are equally valid. Form of agreement, perfect. Taxes. Company shall not be liable or responsible for the withholding of taxes for the customer. Really interesting. And then the last one, invalidity of previous contracts. Bum, 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 bum. Yeah. So this is what was interesting. The news trading. That's, I think, something that's hidden. And then this one. The company reserves the right to determine at its own discretion whether certain trades, practices, strategies, or situations are forbidden trading practices. Those 2 got me out, but you know what? You live and you learn. Take it on the chin. I can't do anything about it now. Yeah. Hope you guys found this insightful. These are like some hidden rules. I don't think anyone else on YouTube has actually gone through this and read this for what it is. Yeah. Hope you enjoy your day. Be safe and do not find yourself on the wrong side of someone that has their own discretion. Cheers.